Hi, today in this video I'll explain how you can make money with cryptocurrency arbitrage in 2025. We'll go over the risks and how not to lose money doing it. So this video will be as useful and interesting as possible. Give it a like, subscribe and leave your comments. Let's get started. Let's break down what cryptocurrency arbitrage is. Today we're going to talk about futures and spot cryptocurrency arbitrage. The idea is very simple. Where the asset is cheaper, we buy it on the spot market or go long on futures. Where it's more expensive, we open a short position. And basically when the prices converge, we lock in that difference. In cryptocurrency, this difference in arbitrage is called the spread. This is a strategy with minimal risks, but there are still some risks involved. We'll break those down a bit later. Spreads can vary greatly. A typical spread is 3 to 4% per trade. Sometimes there are anomalies where it's 15, 20% or even higher. But such spreads are very rare. Often you can find such spreads during pumps or new listings, but they disappear very quickly. And an important point is that arbitrage is not always active. There are times when the market is quiet and there are simply no spreads. At that moment, you don't trade and don't spend time on cryptocurrency arbitrage. Now let's take a look at how much you can actually earn from this. Let's take average figures, 3 to 5% per trade and on average 8 trades per month. And let's figure out how much you can earn from this. I've prepared a table for you where everything is clearly laid out. Let's take deposits of $1,000, $5,000, $10,000, $50,000 and $100,000. A conservative scenario is 15 to 20% per month. With a deposit of $1,000 and a 15% monthly return, you get $150 a month. A 20% return means $200 a month. With $5,000, that's already $750 at 15% and $1,000 at 20%. With $10,000, that's $1,500 and $2,000 at a 20% monthly return. Let's keep going. $50,000, 15% monthly return is $7,500, and at 20% monthly return, that's $10,000. And with $100,000, that's $15,000 a month at 15% and $20,000 at a 20% monthly return. This is a completely normal benchmark when you earn 15 to 20% per month, which is about 8 trades. This is an absolutely normal income. On average, I think beginners usually have a deposit of about $1,000, so you can earn $150 to $200. That's under a conservative scenario where we have a spread of 3 to 5% and 8 trades per month. Now let's look at higher returns when you're catching pumps and listings. There, the spreads are much larger. Let's take an average of 20 to 30%. Accordingly, with $1,000 at a 20% return, that's $200. At a 30% return, that's $300. With $5,000 at a 30% return, that's $1,500. With $10,000 at a 30% return, that's $3,000. $50,000 at a 30% return is $15,000, and $100,000 at a 30% return is $30,000. This is already an average return. Yes, you can get this kind of return if you arbitrage listings, arbitrage certain anomalies, pumps, and dumps. There, spreads can be 50 or even 100%. So in principle, you can make 30% per month on your deposit. And again, if you're a beginner and your deposit is up to $5,000, then you can make $1,000 to $1,500 a month if your deposit is around $5,000 and your return is 20 to 30%. And now let's look at the most aggressive returns. This is when you're just catching pumps, everything is going your way, and you get a bunch of good trades. So let's break down how much you can earn. Again, with $1,000 and an aggressive return of 30%, you get $300 a month, and with a 40% return, that's $400 a month. With $5,000 at a 30% return, that's $1,500, and at a 40% return, it's $2,000. Then, with $10,000 at a 30% return, that's $3,000, and with the same $10,000 at a 40% return, that's $4,000 a month. With $50,000, you get $15,000 at a 30% return, and at a 40% return, it's $20,000. And finally, with $100,000, if your return is over 30%, that's $30,000 a month. And at a 40% return, that's $40,000 a month. And yes, these are real numbers. You can calculate it yourself if you do arbitrage or ask those who are involved in arbitrage. The fact that such returns are basically conservative and average is absolutely normal. When you earn 15 to 20, sometimes 30% per month. Anything above 30% is already considered an aggressive return. When you're really lucky and you get very high quality good deals, a beginner might ask, okay, I understand what kind of returns are possible in this field, but how do you actually find these spreads? Personally, I use an arbitrage scanner because searching for such spreads manually is practically impossible. You would have to monitor a ton of exchanges. Then you'd have to use all sorts of services like CoinMarketCap, but they provide data with a delay. That's why it's better to use scanners that show real-time prices on exchanges. For example, I use an arbitrage scanner. Look, I use arbitrage perpetuals, meaning I go into arbitrage futures, open up broad filters, and select strategies. These are either future plus future or spot plus future strategies. Accordingly, where the token is cheaper, we buy it, and where it's more expensive, we short it. And when the prices converge, we close the position and lock in the difference. It's important to enter with the same amount on both sides. So, if you enter with $500, you should short for $500 as well. You buy and simultaneously short for $500 with 1 times leverage. Using high leverage is strictly forbidden. you'll get liquidated. The maximum is 3 times leverage. Here we can set certain parameters: the buying exchange, the selling exchange, a whitelist, which are the tokens you want to arbitrage, a blacklist for those you don't want to arbitrage, the transaction amount, and the minimum and maximum profit. Again, you can set the strategy and the minimum lifetime, maximum funding rates. Everything can be configured. And below we see a table with spreads. It shows the tokens that have a spread, the history of their spreads, as well as the exchange where you buy, the exchange where you short, and the profit you'll earn after all fees are taken into account. Funding rates are also displayed here. Spreads for different tokens are shown in a convenient table format. For example, there are spreads for the XPL token, for the Omni token, and today Bard was listed. Lombard, there are spreads for it as well. Just look, there are a huge number of spreads. And all of this can be collected thanks to the Arbitrage Scanner. If you were to monitor every token and every exchange manually, you would simply go crazy. But here, this service helps you quickly find spreads between different exchanges and on different tokens. Now let's talk about risks. What kinds of risks do we face in crypto arbitrage? The first is of course fees. Fees for opening and closing trades, funding fees. Yes, they eat into your profits. The second risk is a sudden price spike. Even though you are in a neutral position, whether you have spot or a long and a short, it doesn't matter to you which way the price goes. The main thing for you is to catch the price movement. Sometimes there are very sharp pumps that can knock your trade out, so be prepared for this and always keep margin in your account to avoid liquidation. And again, using high leverage here is absolutely not allowed. Probably the mistake beginners make is that they don't understand how to hedge, how to enter, how to buy. For example, they enter with 200 bucks, buy on spot, and short with 100 bucks. The price moves against them. They close their positions and end up with losses. If you don't understand how to hedge or how to properly enter a position, you can also lose money on this. So if you're interested in crypto arbitrage, be sure to watch the videos on our channel. We constantly talk about arbitrage, how to make money from it, what strategies exist, and we analyze crypto arbitrage trades. Our channel is really interesting, so make sure to subscribe. So let's summarize. Arbitrage is an almost risk-free strategy. We have a hedge position. We have either spot or futures in both long and short. And it doesn't matter to us where the price goes. We're waiting for the prices to converge. We've locked in the spread in advance. When the spread converges, we lock in the profit. A return of 15 to 20% per month in this area of cryptocurrency is absolutely normal. Sometimes there are abnormal returns of 30 to 40% if you get lucky with pumps, listings, and you catch good spreads. You need to take into account commissions, funding, and avoid using high leverage, and then everything will work out for you. And to search for spreads, of course, you should use scanners like Arbitrage Scanner because finding spreads manually is simply unrealistic. Arbitrage Scanner has scanners not only for futures and spot, but also for inter-exchange arbitrage. You can also use Arbitrage Scanner for inter-exchange arbitrage, meaning you buy on one exchange, transfer to another, and sell at a higher price. You can set up notifications both for futures and for regular inter-exchange arbitrage. Set up alerts to your Telegram channel and you'll receive a notification. If you like the deal, you go to the exchange, open positions, and take the profit. A spread notification looks something like this. So, right in your private Telegram channel that you created, you receive notifications showing the spread, where to buy, where to transfer, where to sell, and how much you will earn. That's why you can set up convenient notifications like this for spreads so they come directly to your Telegram. There is arbitrage between CEX and DEX. That is, you can do arbitrage in DEX pools. For example, you can set a notification for a specific pool, and when an arbitrage opportunity appears there, you'll get a notification, go in and take the profit. Again, there's arbitrage on funding rates. You can arbitrage funding rates between different exchanges. For example, for the LI token, the funding rate is 0.87%. The exchanges are shown, and the current funding rates on those exchanges are displayed. Where the funding rate is positive, we short because long traders pay short traders. Where the funding rate is negative, we go long since short traders pay long traders. If we have two negative funding rates, we go long where the rate is more negative and we short where it is less negative, and we profit from the difference in funding rates. The Arbitrage Scanner also offers several types of subscriptions. These are for 1 month, 3 months, 6 months, or 1 year. Starter, Business, Platinum, Enterprise, and at the bottom, there are special Guru and VIP subscriptions. You choose the subscription that suits you best. I use the Platinum subscription. It provides a ton of arbitrage opportunities, both DEXs and CXs. The scanner does all the scanning for you and shows you the spreads. You just go in and take the profit. And I also have a promo code for 30% cashback. So, when you buy a subscription, I give you 30% back, and I also add an extra 30% of days to your subscription. So feel free to check it out. Under each subscription, there's a detailed description of what it offers. I recommend the Guru plan because it's the most loaded one. It immediately goes for 6 months, plus you get access to a private chat, your own VIP manager, access to side events, and a bunch of other features. That's why the Guru subscription is really a must-have if you want to do crypto arbitrage seriously. And they're also running a giveaway for $5,000. One of you will win $5,000. You just need to buy a business or higher subscription. And the more months you purchase, the more tickets you'll have in the giveaway, and the higher your chances of winning. You can find more detailed information in the description. If you're interested in crypto arbitrage, be sure to subscribe so you don't lose track of our channel. We talk about arbitrage strategies, and you're definitely going to like it here. Also, give the video a like and leave your comments. What about you? How much do you manage to earn per month from arbitrage? We'll see you in the next videos. Bye everyone.